Hello, everyone, and welcome to another episode of the Eitel Insights podcast. My name is Dane Eitel, and I am the founder and lead analyst for Eitel Insights. Today, we're going to go over a really interesting chart. It's mortgage in arrears across British Columbia, and as you can see by the title of today's podcast, delinquent mortgages break resistance levels and signal potential trouble for Greater Vancouver real estate values. But before we do get into our charting and our analytical interpretation, first of all, welcome to our new subscribers. Thank you. We did surpass that 600 level, and of course, we're looking for more. So please feel free to share this content on with your friends, your family, your social media channels. Also, we appreciate the thumbs up over the last few podcasts. Please keep it coming. We have either surpassed or come close to 100 likes in each of the last few. So really appreciate that. Thank you. But of course, don't stop there. So that being said, we're going to get into, again, this mortgage in arrears. Now, this is across British Columbia, but it really has a major impact in Greater Vancouver specifically, okay? And we're going to get into that here in a short bit. But first, we're going to share the chart on your screen, and then we're just going to move it over to the side so that we can continue the conversation. So here we go. This mortgage in arrears chart is, again, taken right across British Columbia. This data goes back to 1990, so there is 4 decades worth of data in this chart. Notice that there are only 3 lows that were created again over this past 4 decades. So originally in the 1990s, right around 92 till 95, the market seemed to be doing very well. The market prices had increased or escalated substantially from previous levels. Also seemed to be created ultimately a bubble, which maybe we're in again, right? So during 1995, when the data actually broke, or the mortgage in arrears, the delinquent mortgages, the mortgages that haven't been paid for 3 months or more, surpassed the 520 indicating level, was in July of 1995. Now, the actual peak in prices came in February of 1995, so it's a very interesting thing. As soon as the peak came, mortgage in arrears started to go up because the prices weren't escalating to the same tune that they were before, and people were taking out mortgages and living the high life. Kind of sound familiar from 2016 and maybe again even where we're at right now. So eventually the mortgage in arrears rose all the way up to 3,000. Now, it took a prolonged period of time. That peak didn't occur till basically January or right around 2002, January till March. You saw that finalized top, and then the mortgage in arrears started to fall off because prices were escalating by that point in time. Interesting, during that point in time, again, market prices peaked in February 1995. They actually declined 26% over this period of time. They didn't rise above the February 1995 price until 2004. So that market cycle lasted 9 years, right? So it was a long market cycle. Coincidentally, there was an NDP governorship for British Columbia. There was a premier, multiple NDP premiers lasting over a decade, similar to what we're actually coming into now. The first 3.5 years was an actual coalition government with the NDP. It was the Greens combined with the NDP that gave the majority. This time, the NDPs have the majority on their own volition, so and a majority / mandate. NDPs historically have aided out the buyers more so than the sellers, let's say, historically, right? So again, in the 1990s, that market cycle lasted 9 years and ultimately declined prices 26%. So, and that's something that the Premier has said he would like to do. Also, there has been a rent freeze for investors, so that the market might be a little high based on this recent run up, and of course, we'll get into that here in a bit. So let's move forward in the chart. After the mortgage in arrears did fall off, 2006, 2007, and 2008, beginning of 2008, the mortgage in arrears were again below that 1,000 level and actually below 800 properties across British Columbia that were in arrears. Fantastic number. That broke in basically, let's see here, May of 2008. The interesting thing, June of 2008 was that actual market peak, right? So the coalition, or the one factor leading to the other, seems to be live and real. That spike rose precipitously, right? So that mortgage in arrears hit right around, again, 3,000 by 2010. Interesting, during that period of time, we had the Olympics here in Greater Vancouver, right? So the property values couldn't decrease for that sustained period of time. The economy had to continue to go. I mean, we had tourists coming from the globe, right? So the economy did very well, and real estate prices subsequently rebounded off of the bottom rather fast and faster than Canada. And of course, the issue at that point in time was mortgage values versus the property values. Across Canada at that time, we've always had verified income, right? So when you go for the mortgage, you do have to jump through hoops and show that you do make what you say. In the States, it was something called stated income. So if you said you made $200,000, you could get $1 million property. And actually they said, tell you what, we're going to give you 1.2 for the property, value it at 1.2. So that's how they got into a lot more trouble in Canada, was that clean shirt and the dirty laundry. And in that clean shirt, Greater Vancouver was the cleanest. So that's just really what kind of transpired during that outcome. Here we are again, 2017, 2018, and 2019, and the beginning of 2020. That data points were in this low echelon, right below 1,000. Actually, 980 was that key indicating level. 2 months ago, we did release an article in the Michael Campbell's Insider's Edge, and then subsequently in the Eitel Insights newsletter, we sent it out to our clients as well as our members. And we said that this is about to spike imminently. Henceforth 2 months, and we see a 22% spike. So while it's not the end-all be-all, we are expecting the number to rise 200% from where it was previously, but you got to start somewhere. So 22% is a bite into that 200 lift that we are anticipating. Now, what's interesting, these mortgage in arrears will probably be halted for the next little bit because of these mortgage deferrals. Now that mortgage deferrals are coming to an end, and this data is a little bit stagnated in its reporting just because the banks don't want to give all the negative information out right away. So we'll probably see a little bit of a pullback retest of this 980 line and then expand going forward. Now, what does that mean for the real estate values? Real estate values 2017 was your official peak in the detached market. Now, I'm just going to pull this chart up so everybody can kind of follow along. I'll put it a big screen, and again, we'll just move it over to the side. So if this is your first time seeing a chart with Eitel Insights, the official peak of the market, detached, Greater Vancouver. Okay, now there's 20 markets that make up Greater Vancouver. So it's difficult to equate a Coquitlam, a North Vancouver, a West Vancouver, a Maple Ridge, to the overall impact of Greater Vancouver. But this is the information that we're trying to give you for free. If you want to become an Eitel Insights client, of course, we're going to give you actionable intelligence about each individual market, just like we do here on a macro basis. Just before, again, we do get into the charts, one thing that is excellent news, we have been almost inundated with multiple requests for you to work with myself or my team for real estate needs, your actual principal property transactions. For a while, I mean, I'm an honest fella. I just didn't have the time, and I didn't think that I could do do a proper service for your property. There's open houses, there's lots of things that have to transpire, and we were at the back end here. I go over at least 55 to 60 charts on a monthly basis that I do update. So that's for our clients, and you can become a client. Now, if for your real estate needs, again, you can actually start to come through myself and the Eitel Insights real estate team. We do have buyer's agents and open house folks when open houses are back around that can take care of that. And of course, you can gain the actionable intelligence that we offer on an individual basis and directly appropriated to your property. So you're going to be miles ahead of the kind of common wisdom out there that you might get for just using comparables. So again, now getting back to the chart, I'll put it on the full screen because I did digress there, so we'll just share it again with you here. Again, the official peak came in May of 2017. What's interesting is the initial peak came in the first 6 months of 2016. Now that's going to be very, very important, okay? Now that's 5 years upcoming into 2021. Now, rule of thumb is real estate doubles every 7 years. Well, that's clearly not going to, not clearly, but more than likely not going to occur here over this next upcoming future. And one of the comments was, well, that's not going to be a concern because interest rates have come down. True enough, they've come down recently over these last couple of years. If you compare them to the interest rates of 2016, they're actually very comparable. At that point in time in 2016, the interest rate was 2.62%. Now you're looking around 2.22%. Compare that with 2019 at 4%. 4% down to 2.2 is a significant drop. 2.62 down to 2.22 really isn't that significant. It's actually insignificant and not going to be able to sustain you here if prices begin to fall off. Even at their current levels, average sale price during the first 6 months was 1.785. And the average sale price as of October, which was jubilantly told as record highs, which truly wasn't, it was down to 1,715,000. So, right, you're still down $70,000 from that average sale price of when you purchased the market or purchased the property. And the interest rates are nominal given the rise up but the run down, which still leaves you at a net zero gain or net zero loss, as it would. So that's really not going to be a saving grace for, again, the properties purchased in Greater Vancouver. Now, inside of Greater Vancouver, there are some markets clearly that peaked initially in 2016. Other markets didn't peak until 2017 or 2018. Those areas won't be as impacted. So again, contact Eitel Insights for your individual property needs, let alone bring a Fraser Valley into the conversation. Now, I'll touch on Fraser Valley quickly here. It does seem to be creating almost a double top. Now, prices are nominally higher than they were in 2018. What's interesting about that, it didn't peak until 2018. There was no initial peak in 2017 or 2016 for that matter. It was just in a run up, so it's maybe a market lagger. Could be, right? And again, getting back to the Greater Vancouver chart and maybe even the overall market. Why this will impact the Greater Vancouver market even more so maybe than some of the tertiary markets is because these tertiary markets, these secondary markets, such as a Fraser Valley, such as an Interior, such as the Island, have really benefited from this work from home new normal, right? There's schooling from home, work from home, all of that. So instead of going through this second lockdown inside of a small box of the condo, everybody did want a detached property. And that was a shocker to see how many of them that pulled forward demand that weren't going to buy until 2021 or maybe even 2022 said, yep, doing it right now. So that was a definitely boon to the market. It has risen prices from 1.64 million to up to 1.715. Again, testing the downtrend of these lines. What's interesting, right? That market on the high end areas really hasn't seen any uptick at all. It's actually gone quite further lower. And that's why I use those as examples. When that high end market or the usual market indicating the leading indicators are low, and you have the lagging indicators that are high, it's either that the market is going to completely shift the weighting of which one is more valuable, or that one will come back to earth and this one will actually start to take off. And that's how Eitel Insights clients like to invest, right? We want to invest in a market that maybe has some volition to go forward over the next upcoming years rather than it's going to go down and then, of course, ultimately go forward. But we would buy on that next phase of down, which will likely occur for the Fraser Valley, maybe in 2022, 2023. But in Greater Vancouver, it's 2021 because of the initial wave of frenzied mentality during 2016. Now, just on frenzied mentality, you heard a lot about October historic highs for sales, right? I'm going to give you we shared it with you, and I'll share it here quickly on the chart. I'm just going to move it over to the side because I don't want to make too big of a deal about it, but it is a big deal. October has never been since 1977 they started recording the data, the high water mark of any year, right? So when you compare October to historical Octobers, of course this October looks fantastic. But when this April and May looked horrible, they said, don't worry about it. It's because of COVID-19. Now that it's doing so well, they're saying pay attention to it, and it's not because of COVID-19. We have a tough time. That's a tough pill for us to swallow, right? But I mean, that's their job is to make it always look jubilant and always have a positive headline. When you take a look at this October data sale price compared to other high watermarks, it isn't phenomenal. It is actually just average, right? It's in the average middle of the chart. So when you hear these, the bullish mentality saying these are excellent numbers, excellent usually leads to maybe some good and maybe poor before you can get back up to excellent, right? It's hard to sustain excellency time after time after time, especially in data reporting periods. So you know, if this is excellent, what would weak look like? And that is probably going to be 2021, right? Maybe an ABCD trend according to technicals, which is something that we have believed would occur for a while. Now, this market did rise up faster and test this downtrend, as you can see on this price chart we put back up here for you. It is definitely testing the downtrend coupled with that upper echelon of the market. Now, when this market peaked initially, it wasn't just because of owner-occupied of Vancouverites, right? It was foreign investment, it was local investors, international investors, and that's why there's this foreign buyers tax, and there was such a maybe even a government change because housing prices were getting out of control and it wasn't owner-occupied. So when you had it up here at the upper echelons with all of these other factors commingled in, it's hard to believe that owner-occupied could bring values back up to the old peak, for very long. If it does occur, we believe it'll be just an anomaly, and prices will precipitously fall back as you see this need to sell really show itself into 2021, coupled with eroded demand because it was pulled forward into 2020 with all of these historic high numbers, right? So it will be interesting, and that sales channel was low for a long time, so maybe there is some more demand coming in. And again, if you believe that this market is really going to take off, then again, you can still contact Eitel Insights and see where your individual area is in the chart. If it's below, if it's in the middle threshold, then for you, it might be an absolute buy. For us, it might be, well, let's wait and see what the next step is. It could go lower. That would be our buying scenario. But if you're bullish on the market and you want to know which one is at the low end of the spectrum so you can take advantage of this upcoming run, cool, we'll work with you. I mean, we're it's actionable intelligence, it's information, and it's charting, right? So you get a lot of a tangible walk away knowledge when you identify which times or which price points are more important than others, rather than just saying the market's going to be good because it's better than it was. Well, what about when it was going down? You've still said the same thing. It was going to be better. It's going to be better. So when you just continually hear the same thing without this month being more important than the last, or this price point holding more weight than another, for us, it's hard to believe, right? Because it's almost a recipe for disaster. At least here we're giving actionable intelligence based on previously established prices that had a crux of the matter at a point in time to either say this is an impetus for a downtrend, impetus for a market to stop. One other thing that's coming up, and again, please feel free to sign up to the Eitel Insights free newsletter. It's a way to become an Eitel Insights member without becoming a client. Our paid clients get access to a variety of reports, but we're going to offer up the Bollinger Band study. The Bollinger Band study indicates that both the detached market and the condo market are in overbought scenarios. Now, last time that the market was in overbought scenarios, the market was peaking in during 2017. Now, that's a bit of a different time because it was coming off a growth cycle. So it's normal for a Bollinger to be testing the upper bands or the upper limits of that market capability. It's not normal during a market cycle. And inversely, during February 2019 was the last time it tested the lower end of the Bollinger, which of course subsequently was commingled with the combination of testing the prolonged uptrend of the detached market. So those two powers pushed the market higher at that point in time, and we'll see what happens with these two powers. And now again, over the next few months, this COVID effect really is surprising. It's surprising to see the continued strength or fear, because you just didn't want to live in this new normal in the old ways. So if that pulled forward demand really is pulled forward and there leaves you a lack next year, you'll see that need-based seller be in some serious trouble. Again, not in every area across Greater Vancouver, not in Fraser Valley. Fraser Valley has their time coming, which would be later if Greater Vancouver falls off, which of course that's our case and scenario. In 2017, the original publication again called for 2021 to be the bottom. Just because 2021 hasn't occurred, and folks say that, well, you're wrong because it hasn't hit the bottom yet. Well, give us 14 months after 2021. If it hasn't tested the bottom and we see some other analytics that come in to say, and hey, this market truly has some value here, then that's when we can start to change our tune. But until then, we still see this market as overbought in this case in point. Now, quickly, I'm just going to throw up the condo market chart in its equation to make basically the mortgage in arrears. So this market didn't peak until January of 2018, right? So it's not going to actually fall off. We don't perceive the market bottom of the condo class or asset class to occur till 2022. Where it currently is at, it's actually testing the uptrend. So over the last couple of months, it was testing the upper limits, trying to get into that upper echelon again. That attempt failed. We'll see what this next few months of data is produce. If it does break this green uptrend, you're going to see the market come back down to that lower yellow threshold, roughly around 640,000. If that doesn't hold, which would actually coalesce with a test of the upper band of the prolonged uptrend, the top of the black or the upper black line there. The last time that a market, which was the detached market, broke the upper band of the trend line, that resulted in a volatile move of $260,000. So it wouldn't be unreasonable to think that if this band breaks sometime in 2021, you'll see some volatility occur in the condo market, which could send it into the higher end of the lower threshold, which we've identified between the lowest end would be 525 and the higher end of the lower threshold is 575,000. And again, that's when investment of purchasing can begin to occur based on a technical analysis of historical prices inside of a market region, right? So that's what we identify. It's fair, you can completely disagree, but if the disagreement is just because I don't like you, that's okay. We can take that, I mean, sticks and stones and all that kind of good stuff, right? So, but if there's a bullish case to be made, I don't really see it in the economy. The charts aren't really indicating it. This is indicating a period of temporary strength born out of a pandemic, an odd thing to occur, but a reality nonetheless. And the economy is definitely weakened. We're just experiencing maybe not a second shutdown yet, but probably imminently. I mean, the barbers, the restaurants, the local shop owner is having a challenging time. I know that there's talking about savings being accumulated, and I bet you that would be in maybe some of the higher end or higher net worth families are saving even more, rather than and maybe pulling things out of some properties or some asset classes or the stock market for just the uncertainty that's going on in many places in the world. This uncertainty for Vancouver said, you know what, I'm buying a detached property. Once this new normal becomes normal and you start working back downtown, shops, the new probably Walmart that'll just overrun the world because the mom and pops unfortunately will likely come out of business out of this, which is a true tragedy, but a likely reality. The Foot Locker owner, the store of the Foot Locker probably isn't doing very well. He's had a layoff employees. However, Nike's going through the roof, right? So, the big conglomerations are going to do well in this, and the little companies aren't going to do that well. Now, the little company is the average homeowner here in Greater Vancouver, and that's what we're gauging here across Greater Vancouver is the average sale price. For your individual market analysis, please get in touch with me. You'll gain tons of information. If you're looking to buy in specific markets, you can get in touch with me. Now, just because we're buying in 2021 on average and in majority of the places, doesn't mean we can't connect already, right? It takes time for us to all get to know each other and to really have a plan in place. So when that opportune time does show up, we take advantage of it. We don't want to be the guy that Johnny come lately and we missed out on opportunities. And again, if you're thinking about selling in some areas that are perceived to be maybe a bit frothy or overdone right now, we can help you out with that as well and maybe exit you out at an optimal time and re-enter you back in a different neighborhood at an even better time. So thank you very much for watching. We do appreciate the kind comments and the thumbs up, and please feel free to share it with your friends and family. Take care, folks.